We have new numbers coming in from Lululemon. They are reporting their second quarter earnings, and here is what they are reporting right now. Earnings per share coming in at $3.10. That's a beat because the estimate had been for $2.87. A second quarter net revenue coming in a little short at $2.53 billion, whereas the estimate had been for $2.54. Let's get to the forecast. Lululemon seeing third quarter earnings per share coming in at $2.18 to $2.23, and that's a far cry from the estimate, which had been $2.90. So I'm sure there'll be disappointment there. Third quarter net revenue, $2.47 billion to $2.50 or $2.5 billion, and that's a miss as well because the estimate had been for $2.56 billion. Lulu sees forward net revenue at $10.85 billion to $11, and saw $11.15 billion to $11.3 billion. Okay, let's break down some of the numbers for this company, which is experiencing lackluster sales in North America, with David Swartz. He joins us now to talk about this. He's an equity analyst with Morningstar. Hi, David.
Hi, how are you?
I'm good. So clearly some problems in the numbers coming in with Lululemon, especially forward-looking. What's to blame here for the company's performance? The stock has fallen this year more than 50%.
Yeah, Lululemon has had a tough period over the past year and a half or so. Its sales growth rate in North America has certainly slowed, and it has been affected by increased competition as well as economic issues like tariffs. And so we have seen some disappointments from Lululemon, which is unusual because typically Lululemon has often reported great earnings and often beat expectations. It looks like today's report, the EPS is above what I had forecast. As you mentioned, I was at $2.90, but based on the third quarter outlook, that's pretty disappointing. So naturally, people will be focused on that more than the earnings report itself. Why there's such a large shortfall expected. We'll have to hear today on the earnings call, which is coming up in about 20 minutes. I'm sure there'll be a lot of questions about that. But it does seem like a combination of a difficult sportswear market right now and Lululemon's own problems.
How much of a drag have tariffs been for this company?
I don't think it's been much of a drag so far. However, there will be some impact, I think, in future quarters. The tariffs that are currently in place are higher than what was originally expected back in May, the last time Lululemon reported. So it's probably going to have a bigger impact than originally thought. But Lululemon typically has pricing power, so it can raise rates to offset the tariffs. However, it's unclear if it can actually offset them completely. Most likely it can't. Really, no apparel retailer can, most likely. So it's going to be a combination of price increases and probably some negotiations with suppliers, and then also there could be some margin degradation due to the tariffs. But I think Lululemon's issues are more probably with the sportswear market right now, struggling a bit, as well as its own maybe lack of competitiveness with some new products that are out there from other companies.
Are their lines just not resonating with consumers?
I think that some of them are, but Lululemon's quite a large company now, and so even weakness in parts of the business translate into very large misses in dollar terms. So I think it's a little bit mixed. From what I've seen, some recent products have not succeeded, and some are selling well. We have noticed over recent months that Lululemon has been selling more products at discounts than normal. Typically, Lululemon sells almost everything at full price, but there has been more discounted merchandise on its website and in its stores in recent months than normal, and that does indicate that some product lines are not selling as well as expected.
All right. The problems that they're having in North America, are they the same kinds of problems outside of North America, or are they doing well in other markets?
Lululemon's growth rates outside of North America are higher. Of course, the business is much smaller, so the North America business is more mature, and they have already stores in every major metro area in the U.S. and Canada. So there's only a limited ability to open new stores. And so a lot of Lululemon's new stores have actually been opened in China as well as Europe, where it is underpenetrated. So there are still a lot of growth opportunities outside of North America, but North America is still the largest part of the business. And so weakness in that market does have a big impact on the overall results.
Okay, let's talk about their line as well. You mentioned the whole space is a difficult space right now. Maybe consumers thinking about how much money they do or do not want to spend on something like this. But is there a plan for this company to expand past yoga wear, which is really their focus? I mean, are they looking at trying to grow in other markets?
Yeah, certainly. And Lululemon does make a lot of products that are really separate from yoga. Certainly, people associate the brand with yoga and leggings, and that's certainly its best-selling merchandise and probably highest margin merchandise as well. But Lululemon has expanded into other areas, including accessories like handbags. It also makes other things like jackets, and it's also getting more into footwear. Now, the footwear business right now is quite small. If Lululemon could expand that, it could greatly increase the addressable market for the company. It's not really known as a footwear brand, but there's certainly a big market there that it could potentially access. And then, there's other areas too, like in men's. Lululemon still skews heavily towards women's, but the men's sales have been increasing, and I do think there's a lot of upside in the men's part of the business as well.
David, I also wanted to get you on Gap, which announced that it's going to expand into beauty accessories. They've been struggling as a company as well, so this is something new that they're taking on. What do you think of the idea of both Gap and Old Navy offering beauty and other accessories?
Yeah, I think it's worth a try. Gap has been doing pretty well under Richard Dixon since he came in as CEO 2 years ago. The company itself has been struggling for really 20 plus years, but Dixon has brought some new energy to the company, and expanding more into beauty and accessories like handbags makes sense because it increases the size of the addressable market, and these are attractive markets. The management at Gap was at a conference earlier today, and they talked about how it does allow them to expand their addressable market and also to attract younger consumers who probably don't remember Gap's heyday, which really, to be realistic, was probably in the 1990s. It can allow Gap to reach a new audience, and they've been losing that audience to other retailers, and in the beauty category to retailers like Ulta Beauty that does very, very well. So I think it's worth a try. I don't think it'll be a big business for Gap, but it's certainly a worthwhile effort.
Got it. David Swartz, I have to leave it there. David's a senior equity analyst with Morningstar. Thank you.